Why diversify when your asset or net worth is just X amount dollars?
Then a lot of agents also felt like, hey, why are you telling people that this is the cost?
So are you asking me to put 300k on my ads?
Instead of just inheriting beliefs from social media, property agents or marketing, start researching about other things, ROI. You cannot get rich through buying property. You cannot. You just cannot.
Yep.
If 100,000 or 200,000 is rich for you, good luck.
Welcome guys to More Than Money, the podcast where we talk about property, money and mindset. And of course, we're going to go beyond the dollars and cents. On the last episode, we were talking about why Singaporeans are so obsessed with properties.
Wow.
This episode, the episode is called Property as a Religion.
Why are there a lot of people that don't question buying real estate and just, property is always going to make money? Why?
Like blind faith.
Blind faith.
Okay.
You know, you can never challenge a property agent on property profits. Because if you go on SquareFootage nowadays, if you see, you know, they like to show profits. Profitability, right? You go on SquareFootage, this
500k.
is 500k. That is gross, right? That is not, it's like you bought a property at 1.2 million, you sell at 1.4, that means it's 200k. There's no bank interest, there's no CPF accrued interest, stamp duty. These are all
commissions.
Commissions, entry and exit costs. There are a lot. Why are they people just doing it blindly?
Recency bias is a thing. We all know how the market turned out to be post-COVID. Anyhow throw, you sure make money. So now everyone feels like they are an expert, because if you didn't do anything back then, you would have not caught the wave now in that sense.
In fact, if you bought a property in Loyang Valley, Loyang Valley is a condo apartment right at the corner. You know, there's Esso at Loyang, just beside Loyang Villa, there is Loyang Valley.
Okay.
There's like a 40-year-old condo complex, and people made a lot of money. In fact, a lot more than their Pasir Ris counterparts, which were nearby. Right? Of course, there were unique things like, you know, their floor plans were big. You know, there was an MRT going up. But can you imagine? If you just bought a property, any condo.
So for that property, how much did the owners
I think 40% over a few years. I can't remember the exact number, but a lot of people made a lot of money.
So did like agents go like, oh, you see, this property this old can make this much, so whatever you buy today, which is younger, is relatively safe. Is that what you're trying to say?
No, it made a lot of money, but nobody before that, I didn't hear any property agent or any analyst, you must buy Loyang Valley and you're going to make money, right? It just happened. It was a fluke lah. It's because of COVID and property prices went up. And then now we have hardcore fundamentalists, right? Willing to die.
And
for the cause.
And shall not question the truth.
They talk about diversifying, right? Oh, I buy property because I can make money from real estate, my real estate sales. Then this one like, diversify what, right? But if you're making 99% of your income from real estate, then you want to diversify that 1% for what? There's no point diversifying. I mean, it has to have a certain kind of balance.
I mean, the word diversification, it's also something to be questioned, right? Why diversify when your asset or net worth is just X amount dollars? Why not accumulate first, and then at a later stage where you have lesser bandwidth to go out and make sales, for example, then you diversify. Of course, with lesser returns, that's the cost of it, right? You don't want active income, you want passive, therefore you get 3% versus the property investments, which can make you 20% on a year-on-year. Let's say if you account for leverage, because 5% year-on-year on real estate is insane, I feel, returns. Because versus stock counterparts, which is volatile, right? And S&P index funds, which is too slow. Is it fair to say that, okay, this project has similar attributes to another project that did very well pre-COVID or maybe post-COVID? So is it fair to gauge that you're going to have similar returns?
For example, a client comes to me, I want to buy a condo in Punggol. Which one is going to be the most profitable? Not all ECs are also built equal. You have to go down to the ground and look at these properties physically. Some of them, the water fountains don't work. You know the signs, swimming, the pool is gone. And
swimming pool.
Okay, again, you have to be on the ground. You can't just compare the numbers lah. I don't know if that's your question, but
When you break down the numbers, let's say you buy 1.5 and then you factor in stamp duty, you factor in cost of borrowing interest, you factor in what else? MCST,
Right.
property tax, what have you. You realize your break even in 4 to 5 years is actually 1.8-ish.
Yes.
So when I put it out there that you are losing money even after appreciating by 300,000, it wasn't well received.
Yes. In fact, I think I did a video on the true cost of property ownership. I think 3 years ago. Then a lot of agents also felt like, hey, why are you telling people that, this is the cost? Like, why are you telling people? You're supposed to protect our rice bowls, right?
But that's the truth, what?
Yeah, so the numbers are there, the truth. There are other benefits to buying a condo, of course, psychological, for savings and all these things. But if you're talking about from a financial play alone, I don't think so. I don't think it makes sense. But for a lot of our clients who are gainfully employed, who have no bandwidth for other kinds of investments, I would say, yes, property is the best, most boring, yet stable. Stable and boring is the same, right? It's almost the same thing. Yeah. It is the way
because
to go.
I always ask my clients, what is the alternative? It's either you stay put, because I serve mainly BTO upgraders. They are perhaps considering between upgrading to a bigger HDB, a jumbo, an EA, an EM, or now that they have met me, I shared them with the idea of why not upgrade to a private property instead. And then of course you have to weigh your consideration, the size, and what's the reason why they should upgrade to a condo instead. And for most folks, it makes sense because you are owning a property which is of higher value. If let's say all properties go up 2-3% year on year, then it's better to be holding on to a better valued asset. That's one. Number two, like you mentioned, you take the bandwidth out of the equation. You just have to focus on paying the mortgage. And number three, yes, you get to enjoy the facilities. I had this one client, he called me out of the blue. He wasn't even a client, it's just someone from TikTok. Say, bro, I saw your video. You say, if I sell my BTO and then I buy a resale HDB and then the excess cash I invest out, I can hit 1 million no problem by age 55. And then I don't have to worry about my HDB property value. I said, yes, that's true. Because that is just exploring another idea that you can cash out and then you invest this money out and then you get some returns from the index funds. For example, then he was like, hey, but which one makes me more money? Do I buy the condo or do I buy this EA and then invest the rest? Very hard to determine, right? What condos you buy, what stocks you buy, things like that. I asked him this question. If all things equal, you get the same returns at age 55, which one would you go for? Immediately he said, of course, condo, bro. My point being, you buy that condo, you pay down your mortgage, eventually it will be fully paid, right? That's the simplistic approach, right? You buy 1.5, assuming it doesn't appreciate, you still have 1.5 worth of property value. This is haven't accounting any asset inflation, etc. So you're just paying down your loan. Of course, if your property don't go up and you are considering other investment instruments, then that property may not be for you. If you're looking at financial ROI, because you need to factor in cost of borrowing, right, stamp duty, and things like that lah. For most folks who are gainfully employed and don't have the bandwidth to invest elsewhere, it is a very viable option to upgrade to a condo. Yeah, assuming it checks a lot of boxes. Layout must be good, project size, etc. Yeah.
We even have property agents who come up to us and say, I'm planning to buy a one-bedder condo. Right? And then after that, we will ask them, okay, why? Investment, right?
OPM.
Using other people's money, right? Leverage, right? The tenant's going to pay the installment and I'm going to get $50 cash flow.
Okay.
Right? Because you don't make positive cash flow in the first few years at least, because of high interest, things like that.
So for example, this one bedder, 1 million.
Yeah.
And then you plunk in, let's say 300k down payment. Let's
Rental.
say the tenant pays you the mortgage enough.
Okay.
No cash flow. But 30 years fully paid, 1 million. Why shouldn't I buy? Why are you stopping me?
There are property agents who make $1 million. It's been done. To get there, of course, there are trade-offs in terms of family and health.
I think number one, it's not merely passive because managing tenants can be a hassle.
Yes.
That's one. And then because you're an agent, you're not going to employ other agents to do it on your behalf because you want to save money.
Oh, yes.
Higher returns,
True.
ROI. So you expand bandwidth to manage your tenants. That's one. Anything rosak, you have to attend. You don't want to pay for handyman because save money. For example, I'm just giving you extreme scenarios. So for this particular agent, they have this knowledge to acquire this 1 bedroom. They can buy on their own, save money. Why not I leverage on my skill to buy this 1 bedroom?
You know, if you're gainfully employed, maybe, but for the specific property agent, I'll say, okay, so let's take a look. Investing in Facebook ads, for example. What is your ROI? You know, like for example, Jeff spends what, 2K per month?
So are you asking me to put 300k on my ads?
Over time, yes, because the ROI is much, much higher in your business.
Because it doesn't take a lot. It doesn't take 300k to paying ads.
No.
You can start off small, 500 per month, or even pay someone to teach you. We like this thing called ignorance debt. Pay down your ignorance debt. This is one thing that we learned from Alex Hormozy. Because ignorance debt essentially is just the lack of skill. Because of that lack of skill, this is costing you money. So if you're making 100k as a real estate agent, it's costing you 900k not to earn $1 million a year. So you pay down as quickly as possible to go up from 100 to 250. As you progress in your career in terms of real estate wise, then your budget allows you to pay for better skills acquisition in that sense. I paid someone 9,000. People say, oh, this guy, that guy. But again, I am paying, number one, for accountability. That's one. If not, I wouldn't have started on ads. Number two, is I know this guy has been in the marketing space for long. I just want to know how he thinks. Because like it or not, even though we are in sales and service, we are in a marketing industry, right? You need reach, you need audience. Otherwise, even if you are the best agent out there, you have the best service, right? You serve with your heart, but no one knows you. You're not gonna. If no one knows you, you can't have any business, lah.
Even our parents benefited from it. You know, nowadays there's a great wealth transfer happening. You know, parents are, exiting from their properties with $500, $1 million. So now they want their kids to do the same thing. And it's, buy a house, nothing can go wrong. You know, nowadays we are so exposed to so many investment instruments. You know, we spoke about SNME, we spoke about Facebook ads if you're in business. We talk about even education. If you're a professional, you can take a degree. Skills future. Upskill. Level up your skills and then earn more. You know, there's just so many ways to earn.
Yeah, I think one more thing that we want to share is that in order for you to buy a property and make money from the property, you need to have a good active income. You can only make money from property if you made money before that. There are things that people throw around. All the wealthy, the rich people, they invest in properties. So therefore, I should follow the wealthy. I should buy property. What do you have to say about those people who end up with like a real estate empire, for example?
They invested in their business first. The word investor is being thrown easily. You know, nowadays, you buy one property, you're investor really. There are actual real investors out there. And can I say this? They don't really buy residential. They don't buy residential. Maybe they buy residential. They buy they buy a landed residential for own stay. Whether it appreciates or not, that it doesn't matter because they are that wealthy, right?
Or more like wealth preservation.
In fact, I think for a lot of Singaporeans, it is also that thing, capital preservation. That's why we believe in property so much, because once we make money from our income and we have all the CPF, property can protect it. What else is there? Because it's government backed.
I want to touch on the topic of investors. Like, what's your definition of investors? Because based on my experience, I don't have any investors. Most of my clients are just homeowners. And of course, I want to buy a home, but at the same time, I don't want to lose money.
Yes,
so
of course.
Are they considered investors?
So if you're talking about official terms, like a global investor or before you can take part in our investment, for example, Citibank, they have all these programs where if you don't have a certain kind of liquid cash, then you are not an accredited investor, right? Okay. So that is in investor lah, I would say. If you're talking about property investors, if you're just buying one property, that's
home investor. Okay, because of course, some clients, they want to make money, right? They stay in Woodlands and then I want to sell EA and then I want to make money from the property because I know the property is the way to go. I got CPF anyway. I'm working. I employ. I don't mind saving 2,000-3,000 into my property. Don't talk to me about stocks. I don't have bandwidth. My question to them is, okay, if I tell you to buy Pasir Ris, will you buy? And I said, no lah. I mean, if you can guarantee 500k in 4 years, then maybe yeah. So is that investment, or maybe it's a threshold. It's like, what are you willing to forego if there's some guaranteed kind of return, right? New EC is more or less guaranteed. The trade-off is 4 years of waiting, 5 years of staying, 9 years out of the market. Therefore, I am rewarded by paying in time. So that is my sort of investment. That is what I'm comfortable with. The alternative is in that 9 years, you can flip twice. 4 years later, SSD, you sell and buy again. And then you see, in 9 years, my portfolio is better than that EC guy. Another thing about investment, the assumption is that, typically investors want to buy new launch only because progressive payment. But I don't think it's true. For me, investing is just simple. Just how much money you put in, how much you can get in return, and how short of time.
Why don't these investors buy industrial properties? I don't understand. Why you want to pay ABSD on properties and those things?
Let's assume they are not paying ABSD. Maybe they buy one name each. At the end of the day, you double down. So maybe like the real estate guy, for example, I double down on that one bidder rather than expand bandwidth to improve my business, because there is a cost to everything, you see. Maybe he's okay with the returns.
Yes.
He's okay because he's okay to manage the tenants. Maybe he has experience with tenancy. His SOPs are good enough. He's just adding on to the portfolio in that sense.
Instead of just, property is the best way to go, you must also start questioning, is it the best use of your money at this point in your life?
Okay.
Right? So instead of just inheriting beliefs from social media, property agents or marketing, start researching about other things, ROI.
Okay, I guess because once you commit to a bigger property, you have no choice but to carry on working. You can't take the sabbatical.
Right.
You can take no pay leave for teachers out there. So there is a cost.
Property locks you in. A lot of people who are buying property, it's not also really for profits. It's for equity building.
I always say it's not which one makes the most, it's which one lose the least. If you were to stay put in your HDB, potentially you are going to lose some value there. Like it or not, our retirement is very tight in our property because we're using CPF. Rather than just relying on your HDB and the value of the HDB in 30 years' time, consider upgrading. That is for those who don't have the bandwidth to explore other investment options. But for those who just blindly, like blind faith, maybe start to question, is it really for you? Have you really factored in all the different costs?
It's time to question this property belief, to do your own calculations, to ask yourself what's the objective, to seek people who are pro-property and who are against property. You know, nowadays there's also movements like the M65 movement.
One M65.
One M65. There's also the FIRE movement. There's also the Barista movement?
Barista Fire.
Barista Flyer. There's a crypto and there's Forex and there are groups of these people, try to see the point of view.
What if you explore and then you like paralysis analysis, then you don't do anything? Then it's going to be a problem as well.
You're right. For a lot of people, especially like say gainfully employed, then property is the way to go because no-brainer, utility, property prices are going to go up 2-3% every year anyway. You can use your CPF, good cash flow. Majority.
Yes.
Yeah. But if you are self-employed, if you are running a business, you cannot get rich through buying property. You cannot. You just cannot. If 100,000 or 200,000 is rich for you, good luck, especially in Singapore.
Okay.
Right? So again, it depends on where you are. If you are right now, if you are thinking, I want to earn $2 million per year, I want to build a $10 million business, property won't get you there. But if you have a view where, I want to make $2 million by age 60, I want to sit on an asset of 2 million, please buy real estate.
Sometimes a good salesperson, let's say real estate agent, whether you like it or not, if he made you jump into that property and you made money, you would have thanked him for that decision that you made or forced to make 4 years ago. Right? Because you say, must sell, and then buy, upgrade. For example, then you feel icky, but you did it anyway. And then 4 years later, hey, thanks, Ajon. So sometimes you need that push from external factors, but we're just saying that depending on your season, your life, factor in all the different trade-offs. then make an informed decision. Not making a decision is a decision itself, right? Pondering and not deciding is a decision itself.
But I'm positive for the future because the religion of property is also being challenged in many areas. If you go on Instagram nowadays, the younger millennials and all those things, they rather start businesses. They don't like to stay in a job for more than 3 years, 4 years. They like to explore.
Yep. But what's going to happen to the equity? They're not building equity, right? They're building skills. Not saying that you should go all in business. Most people are bad at running businesses.
Even property agents, because I'm a property agent, I know. They can't even plan their day. So for example, I always like to ask you, what's work?
What's work today?
What's work? That's actually a simple question. If you can't answer that, if I say, hey, what are you doing at 11 a.m? I'm free.
Masuk Johor lah.
Go Johor, buy groceries, pump petrol.
Yeah, I get what you mean. It's like a double-edged sword. Self-employment allows you to have the freedom of time. But if you do not know how to manage your time, it can be, it can backfire. I think that's all for today's episode. We're not sure what we're going to talk about in the next episode.
Is it the upgrade dilemma or something?
I think, maybe we can either talk about FOMO or talk about upgrade dilemma.
Okay, this one.
Because when you upgrade to a private property, typically your square footage is smaller.
Yes.
But if you're doing it for financial ROI, then you have to weigh the pros and cons. Yeah, so that's going to come in during the next episode. And we're going to sign off for now. Ciao.
Bye.